Are you struggling with demand and supply? Let me guess, you either have trouble determining the high probability demand and supply areas, or you keep getting stopped out on your trades. Sound familiar? You're not alone, and after this video, that's gonna change. In this video, I'm giving you a step-by-step guide that will not only change the way you look at demand and supply, but also how you trade them. After watching this video, you will finally realize that supply and demand is actually a lot easier to understand and apply than you previously thought. Please, click away if you're fine with being stuck in a never-ending battle with demand and supply. Step is simple but crucial. We need to identify a high probability demand or supply area. But the question is, what gives an area a high probability? While looking for a high probability demand or supply area, which is by the way always the last green candle before a move down or the last red candle before a move up, we are always looking for three different things. A valid liquidity sweep, a bullish or bearish breakaway gap, a bullish or bearish break of structure. Once we have these three confirmations, we know that we are dealing with a high probability demand or supply area. Now that we've determined a valid and high probability supply or demand area, we can't just blindly enter, guys. We have to wait for the most crucial part of this trading strategy. It's a valid inducement. And many of you guys don't know what a valid inducement is, but if you don't understand this concept, you will get wrecked hard. So let me explain it on the chart. Now, before I dive into a real-time example, let's start off with some theory. So let's say over here, we have a bit of a liquidity area, right? And price is pushing in towards a liquidity pool. And indeed, we form a valid reversal. We have our breakaway gap right over here. We have our break of structure right over here. And obviously, as I said, over here, we have that liquidity sweep. So you would say that we have a potential valid demand area right over here, correct? Now, when can we trade this demand? Because as I said, we simply can't long the price over here with our invalidation over here, targeting higher levels without an inducement. Whoops, you don't want your portfolio to drop like that. So make sure to like and subscribe, and let's keep things steady. Now, an inducement is basically a front run of the demand area, which is inducing people into opening up long positions over here to place their stop loss over here, targeting higher levels. Now, how does this help us? It helps us because those people are placing their stop loss beneath a low, which is acting as the inducement for the demand area. And we know that market makers always need liquidity in order to fill their orders. So this liquidity pool is engineered in order for market makers to then push the price towards a liquidity pool in towards the demand area, and they can use that engineered liquidity by that inducement to fill their order, place their stop loss beneath the low of the demand, and then target higher levels. Now, this increases the odds of this demand actually providing a bounce. The important thing and the importance difference is, though, that you need to be able to separate a valid from an invalid inducement, because just front running the demand over here and providing a little bit of a bounce, it is not necessarily inducing people into opening up long positions right over here with their invalidation over here targeting higher levels. Now guys, I have made a separate YouTube video on the difference between a valid and invalid inducement. I will leave a link to that video in the description down below. And once you understand the difference between a valid and invalid inducement, you're ready to execute supply and demand. Let's take the Solana example that I showed you guys earlier over here. We have that valid liquidity sweep. We have that valid break of structure. We have a bearish breakaway gap over here as well on the daily time frame. Now, why was this a valid short position to take with your invalidation above that supply, targeting the drawn liquidity right over here? Because this high over here was acting as a valid inducement below that supply, and therefore smart money could have accumulated their shorts over here inside of that supply because of this valid inducement and then target lower levels. Now, why was this a valid inducement? Because simply when we look at a 4-hour chart, this move to the downside broke structure over here, so it induced people into opening up shorts over here during this consolidation period or on this move towards the upside, a pullback short position. And all those shorts were going to use this high to cover their stop loss and then target lower levels over here. Therefore, this move to the downside was engineering a lot of liquidity above this high, creating a valid inducement. Then we swept that inducement into that high probability daily supply area, which is where we could have executed a short position on Solana, targeting this drawn liquidity over here for a beautiful RR of 3.65. As you guys know, I love to give away free stuff, and since you're still watching, it means that you're serious about trading. So here's what I'm gonna do. I'm gonna give away one time a 3-month membership to what I think is the most authentic and also the best trading community in the space, Tribe Capital. All that you need to do in order to participate in this giveaway is comment down below the word free, and I will reveal the winner to this giveaway next week on both my Twitter account, in which you can find the link in the description down below, but also through a YouTube community post. Managing your trade is just as important as your entry. A lot of traders mess this up and end up giving back their profits to the market. Here are my rules that I always follow. Only tighten your stop loss after a new break of structure. Take profit at the correct draw liquidity on the opposite side of your entry. And last but not least, guys, always make sure to take profit at the second to lowest low or the second to highest high. This way we avoid being too greedy, exiting too late, and instead we are maximizing our profits. Alright, so now you have a complete framework to trade demand and supply areas the correct way. Now, it's up to you. And don't forget, if you want that free membership, drop the word free in the comment section down below, and I'll see you next week.